Good morning, afternoon, or evening. I am Stephanie Joy with All Things Social Security and the attorney at Joy Disability. You're about to see what should be a question and answer format type of chat from our live session on a particular topic that we find that a lot of people keep asking about. So I'm sharing it here. If there are pieces that could have been added that weren't added during the live, because it's a kind of a fast-paced Q&A that we do every Wednesday at 1 p.m. You might just find that I added something to the end of it to give it a little more clarity and a little more details for those that are interested in that particular topic. So check to see if that's at the end. Otherwise, enjoy the video. Bye-bye. Official says, I'm on SSDI for psychological disability and I do 1099 work where deductions reduce my net. You mean business, right? Like self-employed business expenses are the deductions you're referring to? Because that's what reduces your net for Social Security purposes, right? The bottom of your Schedule C is the net, right? After you subtract all those expenses. How does Social Security factor that into my SGA, and when should I expect a review? Can't tell you when to expect a review. That would be your diary date. You'd have to find that out from the SSA as particular to you and your case. However, with regard to your 1099 earnings, it's going to be your net earnings from self-employment, which is generally the bottom of your Schedule C, that when you file your taxes, that is the number. So that's the number you want to legitimately keep under SGA. Ideally, you keep it under TWP if that's possible. However, they also are going to be looking at your hours and your duties and what all you're doing. That's because when we're self-employed, sometimes we could be working 40 hours, but we're only showing $1,500 a month, which is under SGA. So, you know what I'm saying? The IRS gives us a lot of write-offs. So, potentially business expenses that are legitimate. Some people try to grab more. I wouldn't do that. But also, you definitely want to make sure your hours. I would, if you could keep your hours under 10 hours a week is ideal. That's not really a carved in stone, necessity, but I know if you hit 80, it's going to be considered a trial work period month, regardless of your income. And 80 is like half time. So that's pretty up there. Like when I see people working part-time at 25 hours a week, I know an adjudicator is probably like, more than half time. So while I like my people to try to keep it under 15, some people do 20, it's all going to depend also on your duties. Are you doing anything official that contradicts what you said you couldn't do? You give a psychological disability. Let's say you had a fear of talking in public as part of that much bigger thing. And then your job is, I don't know, speaking to a big mass of people. You know what I mean? Like it's part-time. Yeah, but you're doing exactly what you say you can't do. So I'm assuming that's not the case, but just throwing it out there. Always make sure you know what you're doing is not inconsistent with your claim. And the irony, and that's just for optic reasons, because it still doesn't mean you can do it full time. But how much you want them digging and questioning is I think, what we try to avoid, because it's stressful to be fearful of a CDR. And I don't think most people need to be. But when it comes to working, just be careful. And I think it's great that you're working, by the way. I love it. Hey, so this is a share, thanks to viewer Jennifer, who wanted to point out that when we talk about net earnings from self-employment, which is relevant when we are being calculated as to whether we exceeded SGA. And I will say, I believe when we're talking about earnings credits and trying to get enough credits to get your enough earnings to file with your return to get the Social Security earnings credits you may need to extend your date last insured and all that good stuff. So Jennifer brought up the fact, when we just talk about net earnings and self-employment after your business expenses, she brings up a great point that I actually hadn't even thought about, because, we obviously don't engage in this part. These are just shares because we just do the medical. But if you look at, and I will share the page, the POMS section, where they give the procedure on computing NESE, net earnings from self-employment. This doesn't apply to anybody who's a W-2er, an employee of an employer or was. So they talk about gross income from your self-employment, which would include partnership income, which would exclude any types of income so specified by the Act or the Internal Revenue Code. Don't know what those might be. Number 4, This is a big one. Business expenses. Subtract any ordinary and necessary expenses incurred in carrying on the business. Number 5 is the part that Jennifer was alluding to, and it makes a really good point that you multiply the result by the 0.9235, 92.35%, which has to do with the half of the taxes paid on our income that goes to half of the Social Security taxes that we pay. As you know, self-employed people pay both halves, the employer side and the employee side. Employees only pay the employee side by someone else. The employer is paying that other half for them directly, not even withholding it. They withhold the employee's amount, then they take out of their own pocket the other half and basically subsidize the tax due for the employees. But self-employed people don't have that luxury, I being one of them. So 92.35%, 92.35%, they want us to multiply that by that after business expenses amount. And it's obviously going to be notably smaller, a smaller amount. So our net earnings from self-employment becomes smaller. Now, when we're talking about trying to make sure we don't go over SGA, that sounds nice. But now I'm like kind of concerned about, it makes it harder if that same definition applies, and it seems to. But again, don't hold me to it. We got to still do the research. If it applies to the same NESC that applies to earnings credits, then the 1730 one must have to get an earnings credit in 2024 would be something higher now, wouldn't it? Because if we take 92% and change of that, we are now at 1,500 and something. So something to think about. If I get more concrete, things on it, I will let you know. The SSA has not clarified the question. So anyway, we'll let you know. But great point by Jennifer that the 92.35 will be the number considered, not your 100% after business expenses. So kudos to her. Thank you so much, Jennifer. I will talk to you guys later. And if I come across anything to say otherwise for the earnings credits, and I put the feelers out there to my Social Security peeps to see if that would be the same. So a self-employed person who, has net income after business expenses of 1,730. If the SSA is only going to give them credit for 92% of that, now they're not going to get their credit unless they jack up that earnings even more. So interesting. Doesn't really seem fair to me, to be honest with you. Anyway, okay, we'll see where it's going. Bye, guys.